All right, folks, I'm back. Couldn't do a video yesterday. I had things going on, but I'm here today. So the market has come back a lot stronger than I thought since the bottom last Tuesday, but still a good distance from recovering the entire sell-off that took place recently. And I don't think that's going to happen. And by the way, I will say, actually, this may be a long video. I'm just letting you know in advance. So before I get into it, please like and subscribe if you choose to. And I would appreciate that very much. It helps the channel out a lot. Here's the thing. And again, I'm coming back to this point that I've been making now over and over on these videos, is that nobody is telling you, well, let me rephrase that. The expectation now and the bullish sentiment and everything, that is all based on the interest rate cut that's going to come on September 18th. And by the way, that expectation, which was a 50 basis point rate cut, actually last week on that market decline last Tuesday, they were talking about an emergency rate cut. Now then it went to 50 basis points. Now it's back down to 25 basis points. So you're going to get a incremental rate cut. And I'm telling you this right now. And like I've been saying over these videos over the last few weeks, we're going to come back and revisit this. We're going to revisit my words because I am, on the record as saying to you guys that these rate cuts are not going to be bullish. They're bullish in the immediate sense, like the day of the rate cut, maybe follow through a few days, the reaction by the monetarist zombies, I call them, who follow, they're 100% guided by monetarism. They really don't understand the true effect of monetary policy. They don't understand monetary policy. Just like they didn't understand it when the Fed was raising interest rates and the market went to all-time record highs, and when the Fed was reducing its balance sheet and the market went to all-time record highs. They were all universally saying that those were going to be terrible, terrible, horrible things for the market, for the economy. That didn't turn out to be true. And I was the one telling you guys that it was going to be the exact opposite, that it was going to be bullish. And that's exactly how it turned out. Now, I'm the only guy out there who's telling you that the rate cuts are not going to be positive for the economy. They're not going to be positive for the stock market. They may be initially very, very short term, when these monetarists are triggered into buying the market. There's people out there still now waiting. They've been waiting the whole entire market rally to new all-time highs over and over and over again. They've been waiting precisely for this moment of the rate cut, and now they're just going to jump in. Okay, and I'm telling you that you got to listen to me. That's not going to happen. We're going to revisit what I have been telling you guys. It's going to be negative for the economy. It's going to be the reduction or the withdrawal of these interest income transfers into the economy. And that has been a major, major factor. We're talking about $700 billion this year alone. And we're still not, we got a month and a half left to the fiscal year. $700 billion. Tomorrow we're going to get a quarterly interest payment of about $55 billion. So we're going to be close to $1 trillion by the end of the fiscal year on September 30th of net transfers this year. $1 trillion. Okay, that's like almost like Social Security. It's more than the defense budget. It's unbelievable. So when the Fed starts cutting interest rates, that's going to remove, or it's going to slow down the transfer of those interest payments, and that's not going to be positive for the economy. Okay, so I've been telling you that. Now, this rebound in the stock market, that's highly speculative, although I understand that this week, today we had a Social Security payment, tomorrow we got the quarterly interest payment. That's it. Your fiscal flows are peaking starting from tomorrow through September 2nd, because September, I think August 30th and September 2nd, it's going to be broken up into 2 days. We have the first of the month payments. Okay, that's big. So you're peaking out in this cycle in these fiscal flows. All right. And so I would say as you go into these fiscal flows, you want to raise cash. Now, I'm going to switch topics a little bit. I know I'm going to get into something that some of you guys, you don't like. You were upset the last time I did it, but I want to show I got a new gun. It's the Glock 17. Okay. Picked it up today. Went to the range. It came with 3 magazines. It's got 17 rounds, obviously the name Glock 17. And I really like it, man. So I gotta tell you that, and it comes nice. It comes with, like I said, 3 magazines. It comes with a cleaning kit. It comes with a bunch of other stuff, a gun lock, stuff like that. I gotta say that since I moved to Florida, it restored my faith in the United States as the greatest country in the world. I don't think I've had that sentiment for probably the last 40 years. I thought the USA was fucked up. I thought that we need to make major changes, which we do need to make changes. But I'm telling you, when you come to a state like Florida, which is a free state, a state where not the state apparatus is pressing down on you in every sense, okay? In regulation, in taxation, in your thought process, in what is accepted and what is not accepted, the cancel culture, the wokeism. When you come to a state like Florida, I don't know what took me so long. Maybe I grew up, or I most of my life in big liberal cities like New York, and I became indoctrinated, and maybe that's what made me hate America. I don't hate America, but think that it was really deeply flawed. But when you come to a state like Florida, where this is America, and this is the dream, this is the spirit, this is the credo of America as it always has been. I lost that focus. I didn't know about it. I'm here now every day. I understand it more and more and more. Good people, hardworking people, friendly people. No flash, no Hollywood, no look at all my money. Just take care of their families. They do their work every day. They make their money. They take care of their properties, whatever. Neighborly, all this kind of stuff. It's a beautiful thing, I have to say. Now, if you're turned off by that, I understand it, because probably if somebody was preaching that to me not that long ago, I would have had the same reaction. I would have said, like, look at that fool. He's brainwashed. He's also indoctrinated into this kind of right-wing culture, blah, blah. Folks, this is a very important election that is coming up. All right? Very important election. I'm not against a woman president. Well, maybe, I don't know. But Kamala Harris is going to be a disaster for this country. I don't want to segue too much into politics. So I said it there. I said it. Let me get back to the market. I know that's why many of you come to this channel. All of you probably come to this channel. You don't want to hear me spouting off on politics or sociological things, so I'm going to get back to the markets. Like I said before, we're in the period now starting from, well, actually today, but really tomorrow into September 2nd, the peak in the fiscal flows for this cycle. I have already seen that the year-over-year drop in net government transfers, those are the leading transfers minus taxes, that's now down about 280 billion. So it's actually getting worse. It is not getting better. It is getting worse. It's not like tremendously bad, It's like a slow drip, okay? But that's the thing that I've been focused on, and that's the thing I've been telling you guys about. And it is a drag. It's a fiscal drag on the economy. It's going to keep growth from accelerating, and I actually think it's going to bring growth down. And I don't, even though that second quarter GDP growth came in, I think it came in at 2.8%, which was, and I admitted it was way above my estimates. I was looking at something 1.6, maybe even less. But I think it's going to be revised lower. But actually, I told you guys that the main component in that strong GDP report in second quarter was inventory accumulation. All right, companies boosting inventory, and that's great because that's going to mean lower prices if you have more supply. But it also portends the possibility of weaker earnings because inventory obviously has to be sold. It depends on sales. You know, there's other things that I see right now, like credit card and revolving credit debt, which is going down. And so that's a sign or a barometer of weaker consumer activity. So we'll see. But like I've always been telling you guys, stocks follow the economy. There's no, way around that. It's not stocks lead the economy. It's stocks follow the economy. And so if the economy is slowing down, you're going to see this rally. And by the way, when I see rally, that's just been off the lows of last Tuesday. We haven't recaptured any highs. We're still, probably halfway. I haven't looked at the actual numbers, but it looks, if I just eyeball it on the chart, it looks like we bounced about halfway back. And, the worst, if I could say that, is yet to come, because that is the interest rate cuts. That is all this built up anticipation of the rate cuts, which have been built up over 2 years. And with the mentality that this is the panacea, this is the thing that's going to cure everything. This is, this is going to fix everything. This is going to boost the economy. And I'm telling you right now, this stems from a lack of understanding of monetary policy. Just like I told you guys that the rate increases and what the outcome was going to be, which I was absolutely right about that. I'm telling you right now that this comes from a lack of understanding of monetary policy that is, inherent in the mainstream view that is so built into the mainstream view of monetary policy. Again, it's single variable analysis. They don't understand it. That's why they get it wrong every single time. And anyway, I think I'm going to end it right here. So it wasn't as long as I thought. For those of you who were turned off about the gun demonstration, what can I tell you? And my little diversion into my own personal politics. What can I tell you? Hopefully you'll come back. If not, thanks for being here. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I show you how to use that to make money. Look, folks, we're here to build wealth. You can do it. It's not hard. A set of rules, discipline, understanding of the economy, a long-term perspective, control of your emotions. You can do it. We're going to build wealth together. See you tomorrow. Bye.